on to another stock which actually ended in the other side, or rather on the other side, down 8% in red territory. Now we're talking about MBL Infra. The stock was down about 40% this week alone and 50% if you're looking at the month gone by. Anisha is here to tell us what's bothering the company. Anisha?
Well, yes, if you look at it on a yearly basis, the stock is down 70% YTD. Now, I looked at the internals, and on the valuation front, it is quite comfortable. In fact, the company has a market cap of 290 crores, reported profits of 90 crores in entire FY16. That means it is available at 3 or 4 times its trailing PE, which is very cheap versus industry standards. Industry standards are anywhere between 10 to 15% for the standalone business. The cash profits generated by company in FY16 were 122 crores. That means it's available at 2 to 3 times its cash profits. So on valuation front, it's very cheap. But what is the reason that the street is giving it that much discount? These can be as follows. First of all, the funding constraints. The debt equity is 1.2. The net working capital is as high as 175 days, way above industry standards. It has very high inventories of around 740 crores as of end of March 16. And this compares to the market cap of around 300 crores. In fact, the company has recently won some awards in the hybrid annuity model, for which they might be needing equity, and that is what was spooking the street, because the liquidation of around 400-500 crores could be very material for the company, and they have not got financial closure for these orders. Also, the Bikaner-Suratgarh project of the company got delayed. It was expected to commence in September 16, hasn't come through yet. Moving on to the core performance, the margins have been declining. FY16 saw a margin of 10.7% versus 12% reported last year. Now the management has been sounding positive. We had a word with them in June where they say that they're looking to commence 3 more new projects in FY17, and that is why they're expecting a revenue of 2,900 crores in FY17. That translates to 24% growth year on year. They also said that they do not see any need to raise equity. But this doesn't seem to negate the doubts in the mind of the street, and the stock is clearly correcting.
All right, thanks so much.